Hello, good afternoon or good evening or good morning, wherever you're watching this. You're very welcome. My name is Amir. This is going to be a YouTube live about how to get the most out of your first payslip. Is primarily going to be aimed at medical students who are in their sort of latter stages, final year medical students, but primarily doctors who have just recently qualified and have got either their first or second paychecks or pay slips now through the post or online. And this is going to be hopefully an interactive which you're very welcome to use. Feel free to, if there are any issues with the sort of quality of the sound or the pictures, let me know. This is the second YouTube live I'm doing, and I hope that when people either watch it live or watch it at a later date, get some benefit out of it and find it quite useful. So without further ado, let me load up my little presentation here. And then we'll have a little feedback thing as well. I hope you can all see that. So your first NHS payslip, a guide for new doctors. I guess I should just start off by saying, setting the scene and telling you a little bit about who I am. I've been a consultant now for 12 years or so. And in this, on this channel generally, but on this sort of YouTube live, I have nothing to sell you. I don't have a product to plug or to launch or anything like that. Some of you who might be freshers at this time, you might actually have come across some guy with a suit on, some sort of financial guy who's going to sort of give you some freebies and then talk to you about their product. I have none of that. There's nothing wrong with that, but generally it's important to be upfront. I'm not a financial advisor. This is not financial advice. Hi, Matthew. Good to see you. Yeah, so this is not financial advice. This is just financial education and guidance. All the numbers are subject to change depending on when you watch this. I've tried to be very accurate as much as possible, and there are not that many. There are not going to be that many numbers anyway. They're not going to be that graphs or anything like that. This is meant to be a nice, relaxed Sunday evening YouTube live, and for you to actually understand the very basics, the sort of the scaffolding of personal finance knowledge for young doctors, and essentially stuff that I wish I had heard when I was at your stage, when I was a younger junior doctor. I regard myself not as a sort of guru, but just somebody who's on the same road that you're on and just a few steps ahead. So think of it, think of this seminar or webinar or whatever you want to call it, and also entirety of my channel in that vein. So with that, let us begin. Now, this is actually a real YouTube. Yeah, yes, thank you for that. This is actually a real payslip, a paycheck for a junior doctor. I've obviously anonymized everything, and I will go through that towards the end of this video in great detail at each stage. But essentially, if you think of it, your paycheck or your payslip has some personal details, which is very important to make sure that they're correct, certainly on your first time that you get something online. Make sure that your national insurance, your bank details, your address, your name, these are all accurate and correct, because believe it or not, mistakes do happen and things do get missed out. And essentially, if you think of it as stuff going into your bank account or into your paycheck and stuff coming out, the stuff going in is obviously your main salary, and I'll go through the various sort of components of that shortly. And the things that come out, there are three sort of compulsory ones, and there's one optional one depending on whether you're on a student loan or not. Tax is something that you can't get away with. As a famous saying says, you know, there are only two things that are certain in life, death and taxes, and that's true. And actually, it's worth remembering that earned income, which is what we're talking about here, is actually taxed at the highest rate generally across the world, certainly in the UK. There are obviously other kinds of income other than earned income. So, for example, investment income is taxed very differently and at a much lower rate. If you have a limited company, for example, that is taxed at a much lower rate in terms of corporation tax. If you have investments, that's capital gains tax and so on. So it's worth remembering that tax is very high for earned income. The other thing that will come out of your salary that goes in is your pension, and I'll go through that in a bit more detail shortly. A pension is also sometimes called a superannuation, which is a fancy word for it. And then your national insurance. And the national insurance is basically, as the name suggests, it's kind of you buy an entitlement to some future services, most notably the state pension, which may or may not be there by the time you guys come to retire, believe it or not. So think of it as stuff going in, which is your gross salary, and then stuff coming out of it. And what ends up in your bank account at the end may have very little resemblance to what goes in. And it's very important to understand these numbers and understand that your salary or the payment that goes into your bank account, or your pay, is basically divided into two parts. One is your basic pay, and then the other one is any additional things. For example, your on-call rota payments, or for example, if you've done some extra locoming or things like that. The important thing to remember is that your basic pay is the bit that is pensionable, and it is also taxable. Your additional things, for which there's a different column, they are not pensionable, but they are still taxable. What does this mean, and why is this important? The reason why this is important is because you pay a much lower rate of tax on the bit that is pensioned, i.e. your basic pay, which is basically your 40 hours a week, which is the sort of entitlement to call yourself full-time. Of course, there are people who are, as it says there, less than full-time. So, for example, if you're doing part-time training, or if you take time out for various reasons, and that's all kind of worked out pro rata. But if you want to call yourself a full-time employee, that's basic 40 hours, and that's your basic pay, which is both pensionable and taxable. The other bit is taxable and not pensionable. And this actually is very significant. It's worth remembering now. The deductions, as I said, your income tax, all of this is taken at source, and you don't see it. It's paid directly to the exchequer, to the treasury, and your income tax is taken out as something called PAYE, or pay as you earn. Your national insurance contributions, if you want to be able to claim full state pension in, goodness knows however long into the future, you need to have contributed, as the sort of rules stand at the moment, about 35 years of full national insurance contributions. And this is very important to keep track of because it is actually very easy to lose track of all this stuff, especially if you take time out to, study for an extra degree, or have a baby, or a career break, or travel around the world, or whatever it is. It's very important to keep track of these. And actually, these things are very easy to keep track of these days. It's just on a website somewhere. Your NHS pension contributions. This is a percentage of your pensionable pay. As I said earlier, your basic pay, not the additional bits and bobs that you might be there, and your student loan repayments. I'm not going to go through too much about the student loan because that's a whole different topic. And actually, to be honest, I don't know much about it because I'm a bit sort of a different vintage. In my day, it was actually a straight up loan, and it was very favorable. The interest rate was very low. And I actually maxed it out because I did 2 degrees. Actually, I did 3, but I did 2 clinical degrees. I did dentistry and I did medicine. So I was a student for a very long time. But I managed to, get the loan, and I sort of left medical school with £18,000 of debt. And I was very keen to pay it off as quickly as I could. Nowadays, the student loan is not a straightforward loan. It's actually, in effect, a graduate tax. And so as a result, it's a bit more complicated. So I'm not going to go into that too much. And it's important to understand these deductions because sometimes the system gets them wrong. And it's very important that you kind of know when that happens so you can chase it up. So while we're here, I'm going to get a little bit of feedback from you guys, if I may. If you just bear with me. So if you remember, I don't know if some of you may have been there for the last presentation, but if you please go to another browser tab or scan this with a QR code, and and then I'll just wait for everybody to do that. And if you go to a browser tab, enter menti.com and enter this 8-digit number, or just scan it with your phone if you're watching this on a computer. So to two different screens, and just let me know. There are not that many of you there, but if you're a medical student or a F1 or F2 or a core trainee. Okay, so there are only 2 medical students, but hopefully some junior doctors will watch this in due course. And thank you for being here, guys. I appreciate it. And well, for the medical students anyway, what comes to your mind when you think of your personal finances? A lot of people, what word would you use to describe when it comes to your personal finance? So because I can tell you when I was messy, when I was a junior, it was actually it was confusing, it was daunting, it was stressful, it was messy, all of those things. So I completely get that. So thank you for that. Let me go back to the other presentation. Believe it or not, as a student, your finances are very straightforward. So let's go back to this thing. In terms of your pension contributions, there are some numbers here, but just ignore most of them. This is the one you want to remember about. Most of the junior doctors who will be watching this, F1s and F2s, are either on sort of 8.3% or roughly about 10% of their gross pay, which will come out and will be deducted. And the important thing to understand about this, and obviously as you become more senior, you become a senior trainee, that goes up a little bit. And if and when you become a consultant or a GP, it goes to about 12.5%. And remember, these things are very good things. I used to kind of resent when I was a junior that, why is this money going out of my account every month? I have much better uses for it. Why why am I paying this? There are two reasons. One, you will get older, believe it or not, and you will kind of think about retiring at some point. And the second thing is that so for example, if your salary is £50,000, and your contributions are 10%, so £50,000 times 10% is £5,000. That £5,000 is taken out, and then you pay tax on the remaining 45%, which means that you pay less tax. So the more your pension contribution rate, the lower your tax rate, which is a good thing. And if you think of your pension as paying your future self in 10, 20, 30 years time, it's actually a very good deal in many ways. And just as a sort of basic 101 understanding of what a pension is, it can be a bit sort of a boring topic, but I think it's actually very important. I've tried to make it as simple as I can, or as understandable as I can, but think of it as a long-term investment vehicle and not a savings account. And if you're not quite clear about the difference between saving and investing, stay tuned, because I'll be doing more videos about financial literacy for doctors. And it's a long-term investment vehicle, and a very good one too. And because in the UK we call everything a pension, it is kind of confusing. The terminology can be a bit confusing because it's both what goes in, what you contribute, the actual pot itself, the actual thing that you sort of, when if, say, for example, if you're getting divorced, you split your pension. So the actual pot itself, while it's growing, and then the retirement income that you withdraw out of it in the future, that's also called a pension. So this can be a bit confusing, so bear that in mind. The important thing to remember is that it's not taxed on the way in. It grows for many years, decades potentially, completely tax-free, but it is taxed on the way out. So it's something that's called a tax-deferred investment vehicle. There is another investment vehicle in the UK which is taxed on the way in. In other words, you put money into it that's already been taxed, and it grows again potentially for many decades, but then it's completely tax-free on the way out. And that's something called an individual savings account, or an ISA, which I would commend to you all. It's a very good way of, even if you have not much to contribute as a student or as a junior doctor, it's worth opening one up, and you can do that when you're 18. And it's a really good value. It's a very good way of creating value and creating wealth for your future self. And so a pension is a great wealth building vehicle because of its long-term nature. You can't dip into it. You can't touch it for many decades, potentially. In the UK currently, the sort of private pensions, the earliest you can withdraw out of it is 55. That's going up to 57 in a couple of years. The NHS pension, I think the earliest one you can withdraw from is 60, but the ones that you guys will be on will be 67. So it's quite a long-term thing, and it has a chance to grow and crucially compound over many decades, completely free of tax. It's completely free of income tax, capital gains tax, dividend tax, inheritance tax, value-added tax, sales tax, corporation tax. There's many taxes. This is what I mean when you actually start earning money, when you stop being a student, all this taxes kind of get piled on top of you. And it looks like our government, the Chancellor of the Exchequer, is going to increase taxes in the forthcoming budget in a couple of months. So I think, partly because we are kind of broke as a country and we have been living outside our means for many years, many decades, really. But anyway, coming back to the basics of what a pension is and what is important to understand, the sort of basic scaffolding. There are three partners in this kind of arrangement. It's a bit like the sort of three people in this marriage that Princess Diana used to talk about. It's you, obviously, the money that you contribute, the percentage of your gross salary that you contribute every month. Your employer, i.e. the NHS, and actually it's a very generous employer contribution. This is called the employer match, and in sort of personal finance circles, this is about as close to free money or a free lunch as you can get. And then the government or treasury, the exchequer, which contributes in the form of that tax relief I mentioned earlier. So anything that you pay into your pension, the rest of your salary is taxed. So that's called the tax relief. So there are 3 people that put into this pot, and it's actually an incredibly valuable thing to do. And I have spoken to many accountants and sort of financial advisors and sort of read a bit about this. And the NHS pension, generally public sector pensions, so police officers, soldiers, judges, NHS people, ambulance people, all these public sector workers, that's one of the very few perks of the job that we have, which is the pension is still very valuable. And a lot of people in the private sector would give an arm and a leg to have a pension on the NHS. And I've put the word still there. And the reason for that is because they're sort of generally paring it down, with time, because, our country is in deep financial trouble in sort of a very deep structural long-term way. And so, they have been paring it down even since my time. And I think that's likely to continue. So please don't resent your national, your pension contributions, which are still a very good deal in many ways. And again, just in terms of the sort of basic scaffolding of what a pension is, again, I don't make any apologies for going on about this, because this is the kind of stuff I wish I had learned when I was a junior doctor. And it's important to understand that the pension system is basically it comes in 2 flavors. One is a defined benefit, and the other one is a defined contribution, DB and DC flavors or varieties. And it's important to understand this, because the NHS pension that we are fortunate to have, or public sector workers are fortunate to have, it's basically, there's no pot, so to speak. It's in effect, it's a very kosher and very legitimate Ponzi scheme, so that people at the other end of retirement withdraw out of it, and people, sort of work throughout their working lives, pay into it, and then you have an entitlement to draw out of it at the other end when you retire. And this is a guaranteed income. Okay, this is a defined benefit. So the benefit that we get, the benefit that the retiree gets, is guaranteed, and it's based on your salary and years of service and the accrual rate and lots of other variables that go into the equation. The employer bears the investment risk, providing a predictable future income. Okay, so it's a very good thing, because no matter what happens to the stock market, to the global financial system, if there's a global financial crisis again, like there was in 2008, none of that matters, because you have a guaranteed entitlement to an income. Whereas the defined contribution, you've got the vast majority, in fact, and there are private pensions. Basically, there's a pot that you contribute to throughout your life, which is then invested. And then when you come to retire, you draw out of that. However, it could be, and as they always say in these things, it could either be further up or further down. It could actually be less than you contributed. The important thing to remember is that the difference between the two is risk. That's the main differentiator, and who takes the risk. In the case of a defined contribution, it's you who takes the risk. So if there is a downturn, tough luck. That's how it is. So the great thing about an NHS pension is that it's guaranteed income when you retire. Right. Now, just to kind of drill down a little bit more about the NHS pension, it used to be something called the final salary. Don't worry about the details of that, but now it's called a care scheme. Okay, so there's again within the defined benefit system, there are different flavors even within that. So the one that's currently the one that's current is something called a care scheme, and that stands for the Career Average Revalued Earnings Scheme. And basically, what that means is I've kind of broken it down for you with some basic numbers, which I'll go through very slowly. The benefits are earned on a yearly basis, and it's based on 1/54th of your total pay for that year. And remember, it's your basic pay, your pensionable pay, the 40 hours, not your additional things, because that would be simply too generous. So 1/54th of your basic 40 hours a week pay. So as an example, if your salary is £40,000, then 40,000 divided by 54 is £740, and that's what you sort of bank for that year. And then that is something called revalued each year using basically the inflation rate or the consumer price index, but basically the inflation rate plus 1.5%. And what that means is that £740 gets revalued, and this happens every year automatically in the background. This gets bumped up basically by 3.5%, which is assuming that inflation is 2% and then an additional 1.5%. Now, last couple of years in 2022, and so with the sort of invasion of Ukraine and Liz Truss and the mini budget and all this kind of stuff, the inflation rate went through the roof, and so this was a very expensive thing for the NHS. But that's a guarantee they've given that they will honour, and so what gets banked is not just the £740; it's £766, which is the sort of 3.5% top up. And that's what care means, basically. And then this happens every year, in the background, so ticking over, depending on how many hours you work, depending on the sort of accrual rate. And as obviously, when you become a more senior doctor, as you're now currently a junior doctor, you sort of gradually your earnings go up, your contributions go up, and your salary will go up, essentially. And your revaluation goes up, and all this gets banked in the background, and then when you come to retire, you kind of have entitlement to withdraw that. So I hope that was fairly clear, and this is basically as basic as it gets. I mean, I wish I knew this stuff. And for the people who are taking time out to do extra degrees, like people who are maxillofacial trainee, for example, it's very valuable to keep your hand into the pension scheme, and so that you just sort of don't lose on that accrual, essentially. So we've talked about your basic pay, gross pay, taxable pay, which is the whole thing, and then the net pay, which is what goes into lands in your bank account. And it's worth remembering that every year these things do change. So this a workforce directorate, the government's put out various documents. This is from February of this year. And they do go up a little bit every now and then with inflation and with sort of BMA negotiations and junior doctors strikes and what have you. So it's worth remembering that they do change, so keep track of them. And again, don't worry about this is a very scary bit of that document that I've sort of screenshotted a bit of it here. But I hope you can see my mouse moving. But for example, if you're on a basic salary, this is the bit that is taxed and pensioned, but then all this stuff, the banding, is not part of your pension. I wish that it was. That would be incredibly generous, but it isn't. And so, for example, the payslip, which I'm going to show you shortly, a real one from a real doctor from the recent past, her basic salary was 36,371, but she was on a band 3, which is basically a busy surgical job, basically. And so she was on £72,500 or just about. So it's worth remembering that the headline, and sometimes in the news they are very misleading about this. They go for very high number, for example, when in fact the reality is a bit lower than that. But anyway, it depends on what you do. So for example, if you're in a surgical job, you have a lot, so you're a lot busier, or in a medical job, you're a lot busier, and so your banding is higher. If you're doing, I don't know, public health medicine, you don't do any on call, so it's much lower. So it depends on what you're doing. And so those are tax salary bands. Now these are tax bands. And this is very basic. Please, just don't be scared by these numbers. This is actually basically, it's worth remembering this. This is current, and anything that you earn above £12,500 is taxed. So anything below that, so basically £1,000 a month is not taxed at all, roughly. And most of you will fall in this section, so between 12,500 and 50,000. So that anything in that band is taxed at 20%. And it's worth remembering that anything in that band is taxed rather than the whole thing, right? So if you earn, I don't know, £13,571, just to give you an example, you pay 20% of that additional £1,000 rather than of the whole thing. And this is called a marginal rate. And then obviously when you become a consultant or what have you, then you go into 45% tax band, which is a bit painful, but you know, such is life. I won't go through all of this, but I just want to highlight one thing, which is this one here, important tip. Job changes often trigger emergency tax codes. When you change, especially if you change a different hospital, different trust, this can really mess things up. So you can either sort of be proactive and sort of plan for it in advance, or just be on the lookout, because when you do move from one sort of jurisdiction to another, if I can put it that way, this can really mess things up. So be mindful of that, because potentially you could get overtaxed. And it's important to remember your tax code, and which is part of your payslip. I'll show you that in a moment. But this is the commonest one that you usually start with, which is 1257L, which is the standard code, which refers to that 12,570, which is the personal allowance. So in other words, most people will fall into that category, and then it can be higher or lower depending on a lot of other things. But just remember that when you move, just remember that that can mess things up, and be on the lookout for catching problems. Now, please do this as a junior doctor, because it will come in very handy. It will potentially save you some money. You can actually claim tax relief on professional expenses. And you can do this as soon as you qualify. And some of these which are allowable, are your GMC registration, if you're a member of the BMA, your indemnity, which of course we all have to have. Your GMC you have to pay. Your BMA is obviously optional, but you have to have medical indemnity, your MDU or MPS. When you become a member of the Royal College, you have to pay fees for that, and also any exams that you take. So for example, some of these exams are very expensive, and so you can claim all of that. Now, obviously you don't get the money back, but you pay, essentially you claim 40% off that, if you want to think of it that way. If you go on any courses, if you claim any journals, if you take any journals, or if you buy any books, all of these are claimable against your tax. And you can claim that immediately if you're a junior doctor, if you're in your F1, F2. And I have just taken a picture of my own thing. This is basically, you need one of these, basically a personal tax account, which is on gov.uk. And you get given something called a UTR, which is your unique taxpayer reference. So please do that as soon as you qualify. As soon as you start earning money, you should have one of these, because you can claim. You can't claim that through your payslip. You claim that after the event, so to speak. Or if you have an accountant, basically you just let the accountant take care of it. But they will need one of these, a UTR, unique taxpayer reference, which basically introduces you to the Inland Revenue, or HMRC. And everything is now very digital. There's no paper involved. And this will make your own life easier, and that's for your accountant. Okay. And obviously, as it says, keep all receipts. Again, it's very easy. You just take a photo of it and you scan it in. And you can potentially get a fair amount of money back at the end of the tax year. Right. Hi, Abby. It just says, are there any jobs that would pay the basic salary and have no banding at all? I I think the answer to that is yes. I mean, there are some jobs which there are no on-call supplements. Most junior doctors do some on-call. Most F1s and F2s do on-call. As I said, there are some like public health or pathology or something which are basically 9 to 5, 40 hours a week jobs. I'm trying to think of any other ones that don't have any banding at all. But yeah, so but your basic salary is the one. I hope that's answered your question, but if it wasn't, please ask me again if there's any way I can clarify that. But yeah, most junior doctors, there's banding, and you should know which band you're in and whether it's accurate. One thing I want you to get out of this webinar is that mistakes do happen on a frequent basis. HR do make mistakes, and it's very, very messy when it comes to your, first of all, when you want to pay tax, which you will have to, even if you don't. I mean, maybe at the beginning you don't have that many expenses, but certainly as you sort of progress, you will have to have a tax return every year in addition to all of this business that I showed you, and it just makes life so much easier if you don't have to dig around sort of inchoate mess of your downloads folder and your documents folder or what have you. Everything is just nicely tucked away, and this also applies to your appraisal also. So I have folders for all of this stuff. Right, let's go through a nice real example of a payslip, which I have obviously anonymized. This is a recent one, but it's not that recent. It's actually from October of last year, so almost exactly a year ago. So your payslip will contain the following information. Obviously, your name and your address, your bank details, the payment date, which is in this case is almost exactly a year ago. It gives you that salary. I hope you can see that, which is in this case 36,371, which is the banding I showed you earlier, and something called an increment date. What that means is that on that day, every year there's an increment date, and your salary goes up a little bit on that day. So you get a sort of slight increment increase, whether it's to do with, as I said, the negotiations with the BMA, or whether it's to do with the rate of inflation. It usually goes up by a, usually not a great amount, but it does. And your PT con hours is 40, so that's basically your 40 hours a week. That's what you get paid for that, which equates, in this case, it's £17.44 an hour, which is absurd for a doctor in the UK, but we are where we are. Super paid, that means superannuation. That's the amount of pension she has paid in that particular tax year. Remember, in the UK, the tax year goes from the 6th of April. Don't ask me why. I think it's to do with some agrarian calendar, but it's the 6th of April of a year to the 5th of April the following year. So that's when the tax year clicks every year. And then in this colleague's case, her tax code was K100. Don't worry about that. It's basically she had to pay a little bit extra of tax. The second page, in the middle of the payslip, there are two columns which I showed you earlier. So one is the payments of the 40 hours a week. That is both taxable and pensionable. That's this column here, £330.92. And then this other bit is the other stuff, all the allowances, other payments. For example, you get paid for, if you do a locum shift or whatever. And in this colleague's case, she's in a busy surgical job. She's in a band 3. And so as you can see, her salary is almost exactly doubled. So because it's 100% of her base salary on top of her base salary. And so that's what this amount is. These two numbers added up together. And it can be quite a few things in there as well. So for example, as I said, lots of additional things that doctors sometimes do. And so that's the middle section of the payslip. And then the third part, the bottom bit, and actually let me go back here. Let me this bit here, where did that number come from? The £3,030.92. That's basically this number, the 36,371 divided by 12, simply. So that's where that number comes from. The base salary of 40 hours a week divided by 12. That's basically as simple as it gets. And then the bottom of the pay slip, which includes all the deductions, in this case, income tax, national insurance, and superannuation, basically pension deductions. So these things are compulsory. In our colleague's case, she did not have a student loan, but a student loan would go in here, which is usually £200-300 for a junior doctor. And I think it's 9% of anything above £27,000. And it's a real pain to pay it off, because it never seems to kind of finish. And my advice to you is to try and shift it as quickly as you can. And so in this colleague's case, on this month, her gross pay was £6,061.84. The total deductions, which is these three numbers added together, was that. And then her net pay for that month was £3,765. And she's a CT2. She's a core trainee. And so she was, quite junior. CT1, I believe, I think, if I remember correctly. So she was like 2-3 years out of university, 2 years out of university. And then if you're wondering where that superannuation, the pension number comes from, again, I don't want to sort of bamboozle people, but that number, that base salary, times 9.8%, which is the banding of the pension contributions. Remember, the higher this is, the better. Is £3,564 and change, and then that's for the whole year, of course, and then divided that by 12, that's what she pays every month, basically just shy of £300 a month for her pension. And please keep track of these things. If you want to do a spreadsheet and keep track of them, it actually comes in very, very handy. Your future self will thank you, I assure you. Right, we're nearly there, folks. I hope this has been reasonably useful. Let me just see if there are any other messages. Just on the last couple of slides, there are 3 documents you need to keep each year, okay? And again, I wish somebody had told me this when I was in my early 20s. Obviously, your monthly pay slips, and when I say every year, this means obviously every month, so there are 12 monthly pay slips. And nowadays, obviously, there's some in various hospitals it's called different things, HRPTS, ESR, whatever it's called, but some online system. And it's important not just to be content with seeing it online, but actually downloading it onto your own system, actually downloading the PDF into your own laptop or into your own cloud system, because stuff goes missing sometimes. And the way there's a pro tip for you guys: store in the leading year format, which is 2025, 10, and then dash payslip. And the reason for that is that the computer will then automatically categorize it. That's actually how I rename all my documents if they are date sensitive. So please download that and keep it somewhere safe. The other document you should keep every year is your P60. And the P60 is basically a document that summarizes your tax year. So tax year ends on the 6th of April or the 5th of April, the new one starts on the 6th of April. And the document summarizes how much you were paid, how much pension went out, how much tax you paid, national insurance, all of this. And usually there's a bit of sort of delay, and it usually comes out in May, June of each year. So you should kind of, in the May or June of each year, you should kind of be on the lookout for this. And if you don't get it, chase it up. And again, your future self, and in particular your accountant, will thank you for that. So that's a P60. And then the third one is your annual pension statement. So in addition to all the document in your payslip, that documents your pension contributions, every year there's a thing called the ABS or the TRS. They don't like simplicity, these folks. but the ABS stands for annual benefit statement, or the TRS stands for total reward statement. But basically, they're the same thing. And what they are is your pension statement for that particular tax year. And there's usually a slightly longer delay for this. It usually comes out every September or late summer, early autumn. And again, if you haven't got this, chase it up. And this one in particular is prone to errors and what have you. And so it's very important that you download it and keep in your own system. All of these things, you should have a little folder in your laptop or on your cloud or a Google Drive or Dropbox or wherever, and just put all these, tuck them away, sort of date, name them according to the date so that your future self can easily find them. So those are the 3 documents I would recommend you keep each year. And finally, just a short, and I said I didn't want to plug anything, but there is I'm actually an official volunteer for something called the RMBF, the Royal Medical Benevolent Fund. You may want to look into this. This is actually a charity for doctors and medical students who may be in financial difficulty, who might have some, temporary financial difficulties, what have you. The reason I kind of feel strongly about all this stuff is because I actually struggled when I was a student. I was as poor as a church mouse. I managed to somehow get through it, but it was difficult. And as you can see, there's some good stuff there. There's surviving, F1, 10 top tips, financial help for doctors, and they do a lot of good. I mean, there's, they can potentially help with sometimes some large rewards. And it's very kosher. It's been there since 1836, as it says. It's very, very solid. And so we can actually volunteer for it as well. One of my colleagues here in my current hospital, she was an F1, and she was actually a volunteer as well. So so look them up, the Royal Medical Benevolent Fund. And finally, thank you very much for watching. I don't know if you remember the initial AI generated photograph. It was 2 doctors looking at their payslip and looking a bit worried and a little bit confused. Hopefully they're a little bit less worried and a little bit less confused now. So just before you all disappear, I'm going to share that other feedback thing. Do you remember your browser tab and your QR code? So if you don't mind, I'll be very grateful if you can tell me for future webinars or future YouTube lives, could you cover more of ... What sort of stuff would you like me to talk about? Because you guys are my audience. And if you're watching this as a replay, feel free to put a comment in the description or in the comments box below, and let me know what you would like to hear more about. While you're doing that, I'm going to answer another question, Abby. I've heard about resident doctors opting out of the European Working Time Directive. What would be the implications of this? So, Abby, the European Working Time Directive no longer applies. Okay, we are not part of that anymore in the UK anyway. I'm not sure about the Irish. Obviously, Ireland is still in the EU, so that probably applies to them. But in the United Kingdom, that's basically old news. When I was a junior doctor in the old days, most people just, to be honest, ignored it, and certainly surgeons, because you can't really train a surgeon or somebody of any value, to be honest, on 48 hours a week, which is what the limit was. And that included everything, on call, everything. And most people just ignored it, really. Most hospitals did. I mean, I'm not saying personally you shouldn't ignore the law, but it was not a thing. But again, I think officially it no longer applies because we have Brexited, so that doesn't apply. Okay, I don't know if anybody's answering that. And then just very quickly, feedback. Tell me if it was, thumbs up, thumbs down, or kind of sideways. If you felt that was worth your time, by all means, let me know. And if you have any further questions, I'll be very happy to answer them either now or as a replay in the future. Thank you for the feedback. If you want, I can put the thing back, actually, future, could you cover more of on-call tips, prioritization, bleeps, phone call etiquette, and handovers? Absolutely. There is actually a thing, there is such a thing as, on-call etiquette, phone call etiquette, some do's and don'ts of being on call. I'm not going to do that now, obviously, but I'm very happy to cover that as a separate, both my own experiences as a junior, but also now that I'm, been a consultant and have people kind of working for us, what we would like them to have to hand when you call your boss, when you call your consultant, what information you should have immediately available. Common surgical presentations. I'm trying to not make this a very sort of surgical channel, because I think there's enough of that. It's just basically, this is kind of stuff that I would have liked to have heard, but I can certainly talk about the do's and don'ts of being a junior surgical doctor, sure. How to look after yourself, how to sort of get the best out of the job, how to leave a good impression and get a good reference, for example. Financial planning beyond the NHS pension. This is very, very important, absolutely, because there are a lot of people, doctors are very popular with financial planners, financial advisors, guys in suits who have a PowerPoint and they travel with their briefcase and so on. Doctors are very popular because you will earn a substantial amount of money potentially in your lifetime, and it's kind of safe and guaranteed. Financial planning, tax planning, retirement planning, all of this stuff is kind of a whole different topic which I can go into, but generally my advice to you is to start learning the very basics, just the basic scaffolding of some financial literacy, like the stuff I told you about the pension, the basic 101 of the pension. What does it mean to pay into a pension scheme? Why is it important? There are some good YouTube channels and podcasts. There's one called Meaningful Money. He's not particularly medical. He's just a generic guy, and he's very good. His name is Pete Matthew. I highly recommend him. He's great, very sound. There's another one called Medics Money, who are colleagues, they're two GPs who, again, I think felt sort of the dearth of lack of financial literacy for doctors. This is something that's very common, actually, a very common problem, and is commonly talked about in the RMBF seminars and webinars and meetings and so on. Doctors are generally not very good with money, and it's an issue which I hope to try and make a contribution towards. How to approach failure at work and learning from mistakes. By the way, all of this stuff is anonymous. Feel free to chip in if I don't know who's talking about anything at all. This is completely anonymous. How to approach failure at work. Well, it depends on what you mean. I mean, that could mean a lot of things. Failure to keep on top of the job. To keep with the basic day-to-day tasks of being a junior doctor. Don't forget, there's a lot of help and support. Failure to pass an exam, that can be very demoralizing, very expensive, can hold you back potentially. Learning from mistakes. I mean, I'm hoping that this YouTube channel is basically you learn from my mistakes. One of the things I wish I had known was learning to invest earlier. To cut a long story short, I became very interested in this stuff when I became a parent. I don't know if anyone watching this is a parent, but when you do become a parent, it gives you a little jolt. Well, it gives you a big jolt. This stuff becomes really real, and you become much more attentive to your finances. I mean, obviously nobody expects, young people in their 20s to be fussed about all this stuff. But we should be a little bit attentive to it as you just go through. And again, you don't have to be, too concerned about it, but just learning some of the basics, some of the basic scaffolding of knowledge that will stand you in really good stead, I assure you. Locum work. I don't know what the question is, but yeah, if you can, it's great. You can top up your monthly salary. It's not pensioned, so that's that. But you know, and there's plenty of it to be had, because quite often some people, you know, there are quite a few rota gaps depending on specialty, but there are often quite a lot of rota gaps which you will be invited to cover if yeah. So I think we're coming. What's the time? Where are we now? Yes, it's coming up to the hour mark. Thank you very much for being here. I'm very grateful for your time. I appreciate it. I hope it was useful. If you have any further questions, there's a comment section down there. Do look out for some more YouTube lives. You know, I quite enjoy doing these. Even is kind of shouting into a void. I hope it isn't. I hope it's going to get picked up and people find them useful. I regard this as worthwhile if only one person gets one help point out of it. That's good enough for me. So without further ado, thank you very much and have a lovely evening.